Thank you very much, and we are here to brief on the 52nd meeting of the GST Council and the decisions taken therein. A decision taken on the tribunal-related issue. It relates to the appointment and the age limit, maximum age limit of President and the members. As things stand before this amendment of today, the President shall have a tenure up to a maximum age of 67. Today, it is amended to be 70. The member would have a maximum tenure up to 67 after today's amendment. Earlier it was 65. So that is one amendment done. The minimum age of appointment, of course, was not specified earlier, but we are now saying for the appointment as president and member is recommended to be 50 years, minimum age. Food preparations of millet flour in powder form containing at least 70% millets by weight. And because I'm saying millets, I want to emphasize they fall under the category of HS 1901 and not any other. We're not talking about others. So in powder form, millets being blended with any other atta, for instance, where the millet's composition is 70%. We state that they will be having a 0% GST if sold in other than pre-packaged and labeled form, meaning when they're sold loose or when they're packed but with no pre-packaging in the sense of branding or name or nothing else. The GST Council's right on taxing the ENA was well established. Despite that, the GST Council, and I'm very grateful and I'm happy to say this, despite that, the GST Council today has ceded that right to tax ENA to the states. Alongside it, the GST on molasses has been reduced from 28% to 5%. The GST rate notification will be amended to create an entry for the ENA for industrial use, and that shall attract 18% tax. In order to promote tourism, we have given a conditional exemption to foreign flag, foreign going vessels. The exemption is from IGST being levied. For foreign flagged and foreign going vessels, if they convert temporarily for a coastal run.
The council has recommended that a period till 31st January 2024 may be given for filing of appeals by the taxpayers for all orders which have been passed till 31st March 2023. There is with a little bit of enhanced pre-deposits for appeal at present are 10%, but for these appeals which are being given an extra time, instead of 10%, they will have to pay 2.5% of the amount in dispute additional, and this 2.5% will have to be in cash from the electronic cash ledger. Zari, there was some confusion on Zari. Earlier the council had recommended a 5% rate, but there were some more Zari items in which plastic is also being used. The council has clarified that they will also attract 5% GST and not 18%. Processing of barley into malt is being done. irrespective of whether it will be supplied to the liquor manufacturing industry or otherwise, it will attract only 5%. Government authorities, when they take services relating to water supply, public health, sanitation, conservancy, solid waste management, slum improvement and upgradation, when these services are taken by government authorities, then these will be exempt from tax. Similarly, even if there is a composite service involving up to 25% of service, they will be exempt from paying a GST on it. Similarly, there has been a doubt on whether the district mineral foundation trusts are government authorities or not, and whether they are eligible for same exemptions as available to other government authorities for the purposes of GST. So it has been clarified that DMFTs will also be treated as government authorities.
In case of railways, certain services which were provided by Indian Railways were charged on forward charge mechanism, and there were certain services which were provided to railways were charged on reverse charge mechanism. Now there was a request from railways that because if they pay on reverse charge basis, then they will have to pay from cash, they were not able to utilize ITC. So the entire spectrum of services which are provided by railways will be now subject to forward charge, and ITC would also be available in discharging it. Certain exemptions which were provided when the service is provided by government agency, those have now been withdrawn. Another issue was that GST law provided provisional attachment of property during the pendency of investigation, and the period provided was 1 year. But in the GST rules, it was not clearly provided that when the form is issued, it will not be required to be mentioned that it will remain valid for 1 year. So now and what was happening was that once this was issued, attachment order was issued and say sent to bank, they were not releasing the provisionally attached account on expiry of 1 year and were waiting for explicit order from the tax authorities. So now this form has been aligned with the legal provision, and now in the form itself it will be mentioned that it will remain valid for 1 year, or if attachment is lifted before that, so whichever date is earlier.